Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again for the recap of the portfolio. We're going to go into the numbers. We're going to talk about the positions. We're going to talk about the moves that we've just recently made, where we're sitting at, where we are starting off the 2025 calendar year. And we're going to talk about why I'm so excited about my traditional finance portfolio, because I'm a crypto guy. And, you know, building out this TradFi portfolio has been interesting. It's just been different. There's so many more options than when I originally liquidated everything and went all in on crypto and wanted nothing to do with the TradFi space. It just seemed like it was set up for the everyday person. The only options available meant that you weren't going to be able to enjoy your wealth or be wealthy until you were in your 70s or 80s or 60s or at retirement, maybe. And a lot of those people are getting to retirement now and finding out that they got to go be door greeters at Walmart. So, you know, can't say that I was wrong. But there's the tools that we have at our disposal now, and the options and the opportunities are plentiful. There's a bunch of ways to get it. Obviously, I'm narrative driven, so everything I'm looking at is crypto adjacent or crypto involved. Whatever. But we're gonna break it down. We're gonna talk about it because we got the numbers. Numbers are in the end of the year. I am more than pleased with the results that I've made for myself this year, and we're going to talk about that. But first, let's get the housekeeping out of the way. Have you liked the video? Because we're coming in hot. These videos for 2025, we're going to come in hot. I'm going to do my best to be better. These are going to be long-winded. There will not be a too long didn't read for my Reddit fam. Just skip by it. This ain't for you. That's fine. But if you've been here more than twice, definitely touch that subscribe button. Hit the subscribe. I don't constantly just dump content just for the sake of dumping content. I'm not going to flood your feed. You're not going to get a million notifications. It's at most one notification a day, if that. And the one notification a day actually is just the first full week of the month, because we have our monthly updates. But outside of that, it's Wednesdays and Thursdays are the 2 days that I drop. So throw that out there. Also share the video if you find value over here. We're not trying to get rich over in the Wolfpack by ourselves. Let some people know, might be able to add some value to them as we document my journey to getting to $1 million in net worth, getting out of the rat race, being able to retire early, being able to build wealth and establish oneself, making under six figures, all of the things, all the stuff that they tell you are reasons that you should resign yourself to failure and a lack of effort. We're combating all of that. So let's jump into it. We're going to start off with the income portfolio because that's where the majority of the money is. And yeah, that's just where the majority of the money is. And we're going to go ahead and jump into that. So when we pull this up, let's get me small. Let's hide me completely so that you can just hear and we can just talk about it. So pulling this onto the screen, what we're looking at for those of you that are just listening, I am not, I listen to most of my stuff, so I'm just going to break this down for you. Where's the screen at? What we are looking at on the screen right now, we're looking at the portfolio overview. So what we've got is the portfolio account value is currently at $26,326.10. It started off the year at much less than that. Like if we go back to January, we talked about this in the financial breakdown yesterday. The dividend payout that we got in January of this year was $117. We have scaled our way all the way up to this last one. The last payout for 2024 was $2,000, or the last payout for 2024 put us up $2,228 from the $117 for a total of $234. $2,345. My bad. So we've built quite a bit. And, considering that we're sitting at like $26,000, $25,000 actually is like around $25,000 range because we did some buys today. Kicking out over $2,000 a month is pretty nice. And then now that we're talking about the portfolio breakdown, the other thing that I wanted to share was in 2024, how much of a raise did I give myself? Now, see, this is one of those things that I think is very important because I am a big advocate of not having to walk up to someone else with your hat in hand to ask them to take care of you, to ask them to, cut me a break. You owe me this. I show up to work every day and you just give me and give. I believe that if your business owner isn't going to take care of their employees, they do not deserve their employees. I believe that most business owners don't deserve good employees. I'll straight up say it. I'll be like, you don't deserve it because be honest, the give and take game that you play when you enter into a contract of employment at a business that you don't own is they want to pay you as least as possible, as little as they possibly can to get you to show up every day. And you want to show up every day and get the maximum amount of money that you can for doing the least amount of work. Now, see, I don't function that way. And this is the reason I tell people all the time, I'm a terrible employee because I know the game. I know how the meat's made. I know how the sausage is prepared. So I'm not going to tell you thank you for me coming in to make you money because I'm being extracted. Like I'm on the short end of this stick. You get to do whatever it is that you want to do. You get to go buy umpteen cars. You get to go move and shake and be important and pretend and posture and do whatever it is that you want to do at my expense because I show up and make you money because you're not doing my job because you don't want to do it. I'm not doing your job because I didn't want to risk them. I obviously either am not in a position to risk the money or I do not want to risk the money to be in the field and, harbor all those risks. So that's the deal that we make. But I don't think either of us owes either of us a thank you. This is an exchange. I know that I'm a resource that's being extracted. And on some level, you are screwing me because I'm not getting 100% of the value that I create. Which is why I don't believe in asking for raises. I'm like, if you're not going to give me money, I just won't work for you for long. Because I'm constantly in every position that I've ever been figuring out how to not be there. Because I honestly am one of those people where I don't want to go to work. That's just to be honest. Like I'll show up, I'll outwork everybody there. I'm highly competitive. And I believe that I am that good. But the other thing that I am that good at is going and hunting for myself. So we gave ourselves a $13,000 raise this year, specifically for the 2024 calendar year, as per Charles Schwab, what was paid out to me, $13,281.45. Pretty freaking awesome. Now, that is nothing to shake a stick at. Like, obviously, we're going to have some tax implications on that. Actually, let me pull out my trusty dusty calculator and give ourselves a look at our worst case scenario here. Hold on, let's see here. What is that? 13,281.45 times, we'll just say 30%, 0.3. So I'm going to owe about $4,000 in taxes on that, which is cool. Cool. We're going to take that. We did some tax loss harvesting that'll go up against that $4,000. It is what it is. I'm fine with that because I had access to all that money the whole year, and we made the adjustments. And what we're doing currently is we're in turtle mode. And once we get our final paperwork and can start piecing together our taxes, we will, on the back end of that, most likely be paying that mostly out of dividends. I'm hopefully looking at doing this in a fashion to where I don't have to sell off any more assets to do that, but we're just going to be reinvesting and stacking up our income portfolio, so that way we're bolstering the income for this year, and hopefully that'll just be 1 month of dividends and we just give it back to them. We take 3 months offline January through March, we're holding back until we figure out what the burden's going to be. And during that holdback period, we are going to be working on bolstering our long-term high conviction portfolio. We're going to also be building and rolling into itself in the income portfolio. So that way we're looking at using the dividends first. Then we will see if we're going to want to do something out of the income that's coming in from the W-2, or if we're going to just trim off a little bit of the assets. But at the way that it's sitting right now, we're looking like we're going to be in the ballpark of, it'll be probably $1,000 extra, if that. But I mean, 3 months down the line, that was if we had to pay those taxes today. But 3 months down the line, who knows? Like, it could be a little bit less, a little bit. I mean, we could be at that marker because we are quickly scaling this portfolio. That's just what the end numbers were. And this didn't start ramping up until about, I'd say, August. August was when we started rolling on this. But we're gonna keep it moving. So let's look at the positions. What do we have? So we have a little bit of fiat, and I'm about to nix that position and probably roll it back into my Misty position. Grab me a few extra Misty shares. Or I might grab a couple of Morrow shares, which is a new entrance. Just because I am so highly convicted that I don't care about hedging. I really don't. In the long term, I don't. Like, within the next 31 months, within the next 5 to 10 years, I do not care about hedging. I was kind of doing this, looking at what could potentially be happening towards the end of the bull run. But on that same note, I can just roll the positions into other things if that's the way that I feel about it. But specifically with Misty and my crypto positions, that volatility is going to be there regardless. So I'm not concerned about it. So we're probably going to be getting rid of that position as well. Morrow is now replacing our week 3. So as far as moves that we've made with the income portfolio, we sold off our NVIDIA position. I was building up an NVIDIA position. Morrow released, and I was like, whatever week Morrow is, that's the position. I'm going with Marathon Digital. We will be collecting some shares of Marathon Digital as well. So that replaced NVIDIA. We did a sell-off on the NVIDIA position. We switched it over to the Marathon Digital position, Morrow. And that's just what that is. Misty is in the ballpark. Once we get to about, I said I wanted 1,200 shares. Now, I do have a few different positions that are stacked in here. I've got our house savings is rolled into this position right now, and I'm keeping track of those shares because those will be moving to their respective portfolios. One of the things that we did this year that I've done different, one of my tweaks, well, we'll talk about that after we do the position. So we got the house improvement savings position. We've got our Ulti position that we rolled in that was actually a position that was meant to just feed this portfolio. That's rolled into here. Currently, we are using the wheel strategy for those shares, and we're wheeling them into the Y ETH position until we hit 100 shares. It's a grind. That's an expensive one. It's a primo. But once we get there, then that Y ETH will start wheeling into the other positions that we are building. And then I'll start having some more additional help from within the portfolio. We're getting there. Our YMAX is a stabilizer. We buy a share out of every position that we have. And so we have that. Hold on. Let me pull up my trusty sticky note, because I keep notes on all this stuff, because if you don't, especially if you're doing things that are highly complex, you will get lost in the sauce. And we're not trying to get lost in the sauce. So let's take a look here. House savings. Oh, and the Bitcoin standard. We also have a position of holding that's going to be our Bitcoin standard that is living in that Misty position as well, that is slowly eking its way up. We have, after we broke 100,000, we shifted the Bitcoin standard to be in a Misty position. So we're buying a few shares every 2 weeks with our minimal Bitcoin standard money. So it's the whatever we're using now. Also, we have 10% right now while we're still managing this debt that we've got to get rid of this year. We're managing the debt, but we also have 10% of the collective income that this portfolio generates in general, which means that over the course of 2024, that put $1,328 directly off the top every month out of that got utilized to purchase Bitcoin. Now, moving forward, we've got a few different options. We can, as far as the Bitcoin standard, we can roll those shares back into Misty itself because that's on the Bitcoin standard. We also have the ability and option to buy MicroStrategy, which is a part of our Bitcoin standard. We also have the ability and option to purchase MSTX shares, which is part of our Bitcoin standard strategy, which we will be utilizing all of that as well as buying Bitcoin directly. Like a bunch of, we've got a bunch of different options here. Also, we've been using out of this collective pool, we've been getting ourselves some additional MicroStrategy. That's how we've built up our MicroStrategy position to where it is now. We will be looking at that here in the next segment. But yeah, so that's pretty much where we're at. As we can see, we have a pullback. I buy Misty constantly. When I say I buy no matter what, I treat it just like Bitcoin. And as we can see with that pullback at present, at recording of this video, we are down on that position as far as the growth and what's considered by Charles Schwab, at least looking in this portfolio, you know, full transparency. You get to look at some red numbers sometimes. This doesn't count total return, but on the share growth value of what's in here's return, we are down $1,194.89. So we're not always on the upside. And as an income deal, I'm not looking at the growth. I look at total return. So what we're going to do here in the interim, we're going to jump over and finish out this conversation on the income portfolio. I'm going to bring up our snowball analytics. As you can see, the entire portfolio we are sitting up, we are up 28%. Now, one of the things that I will note is that is not beating our Bitcoin standard goal of 30%, but we're in the ballpark and we're doing better than basically anyone who's just doing TradFi. And let's see, let's go to portfolios. Let's take a look at the holdings and we can kind of look. Okay, so when we look at Misty by itself, our total profit on Misty is at 29.69%, which is acceptable. That's acceptable. I mean, we're so close. We're right there, right at the Bitcoin standard. So we want to be able to get 30% now total. This actually is even better than what I consider, because when I look at income, I literally just look at income. But you want to look at some form of figuring out where you're sitting, because you don't, I don't want to say that I'd ride these positions to just zero if they Naviroted to zero. So like you want it to kind of be balanced, but I don't look at it as the position's going to have growth. Now, Misty has the ability to have growth. I have seen it grow. I have played on that, done some swing trading on it. And overall, it was cool, but it harmed my income. So the goal is we're going to have 1,200 shares of Misty. That's my target. We're at 771 as of this recording. And basically everything that I'm converting over, because we're removing some other positions from other places, and everything is spilling into that core Misty position for the income portfolio for now. Now, as we start branching these portfolios out, those shares will get transferred over to that portfolio, their respective portfolios. And for instance, I'm going to have my housing expenses, which is the mortgage specifically, and me paying down and any home improvements. That's going to be its own portfolio eventually. Right now, they are living in the collective 771 shares of Misty that's here in the income portfolio. And every month I get my calculator out. I keep tabs on how many more of those shares I'm getting because I am recycling that every time. And as we build that up, once we get to 1,200 shares, where this is just at 1,200 shares of its own volition, I'll start parsing out those portfolio pieces and we'll rebuy them into the income portfolio on their own. But the reason I want them separated out like that is because I don't always make home improvements. I'm not always utilizing that money, so I can just let that drip until the months that I need it and just continue to just build that portfolio up, build that income up. And then at a certain point, I can shift it over to where I am exclusively, when I'm not using it for a home improvement, I can just use that monthly additional income to attack the principal on my mortgage. And that's the way that I'm thinking strategically with everything. Another one that'll be a good example is automotive expenses. I'm planning on getting a portfolio set up that's going to take care of, if I choose to own a car, all the maintenance, all the expenses, and the gas. I'm looking at getting it to where all those expenses come out of that pool of money and I get kicked off every month. Now that one will probably not be a Misty position. It'll be something more along the lines of a YMAX because I am going to want it to pay weekly. And that's just one of those things. That's the way that I would want that. So that way, if I've got to get gas, cool. If I don't have to get gas, I can just buy more shares and build up that position. But yeah, that's the way that we're looking at it. And so like when we're looking in here, I like looking at these positions to see where we're at. So like our YETH position, we're up 7.55%, total return. That's moving in the right direction. That's also on drip, which is pretty nice. Our YMAX position, we're up 6.6%. Basically, everything's up but fiat, which is a hedge. Maro, we just purchased, so we'll see how that works. So far on the daily, we're looking good, but I don't care about the daily. Like, I care about the total profit. I care that I'm getting the money. I care that it's producing income, and it's not NAV eroding to zero. Obviously, that means that you have to reinvest some of this, but also looking towards a space where I'm living off of this income. One of the things I always recommend to people is I'm like, if you're looking at living off dividends, I would factor in your investments, a bare minimum of investment that comes out of that dividend pool to refeed the machine. Because especially if you're in high yield, you don't want to have to get in a situation to where this is the only tool in your tool belt, because this is specific for income, but it's highly volatile income. So I don't want to have to start eating my shares that are producing the income. So for me, I factor in my investment, which includes reinvesting in this portfolio. It includes continuing to build my long-term holdings portfolio, which is the portfolio that we're going to be talking about next. But it's one of those things where I don't just do yield max or high yield dividend, and that's the only thing I do. Like, that just doesn't even make sense to me. Like, people that do that are, in my opinion, a little bit cuckoo. It's a little bit of cuckoo going on there. If that's the way that you only get to do one thing, like, that's not how that's going to work. It just isn't. So let's jump over and let's talk about the high conviction portfolio. So we're going to bring this portfolio back up. Boom. So what we are looking at now, we're back over into Charles Schwab. Now, I like to give the receipts. I know not everybody wants to do that, but I do. So one of the things that I want to do here, I also want to, the thing that I want to do here is we'll go through my positions, my conviction positions, and we'll talk about it. So at the top of the list, we see we've got Soul Strategies, which is ticker symbol CYFRF. that is basically a company that is doing what MicroStrategy has done with Bitcoin. They're doing it with Solana. Now, Solana is one of my top picks for my active portfolio for this bull run because it's a no-brainer pick. Like, VC is going to get their money back. I don't have to like it. I mean, I do like using the chain. I'm not going to say it's decentralized. I'm not even going to say that it's, because I know that A, it's not decentralized, but B, it's also, it crashes, it locks up, it has to be rebooted. And if you can reboot your chain, it's not decentralized by definition. Just saying. That said, there's a lot of VC money in it. They're going to get their money back, and I'm going to get some of their money. From the stock perspective, this company makes money. Like, it's a high conviction play for them. It's a high conviction play for me in the sense that Solana has performed exceedingly well for me. Since I started talking about Solana, which was late, we've been eating. The ecosystem from a DeFi perspective, which is my angle on everything that I do in the crypto space, I like it. It's very usable. There's a bunch of opportunities to make some income in there, and like we're also in the ecosystem. So a company actually shifting over to do that, they also run some of the they run a couple of validator nodes, so they're producing income within the ecosystem as well. You know, that for me, that's a no-brainer play. Like I like that. Also, we had a little bit of a dip on here, but we are back in the green on this position. DeFi position number 2 is DeFi Technologies, DEFTF. They're a big DeFi player. They've got a lot of income being generated as a company within the DeFi space. The stock's been undervalued, but we still hit our $100, so we started pulling some of our positions. That's the reason there's only 300 here. It started, I got over 500. So our sole strategies, I went ahead and wanted to get a 500 share position. This was over 500. So we did our initial sell off after we broke 100% on that, which has been freaking awesome. And yeah, it's another crypto play. They're undervalued like this. I mean, the price right now is still under what I think it should be personally. Like, the company themselves believe that their share price should be around $10. And that's just based off of the income that they're making within the space. Crypto companies, they don't know how to value them. So there's a lot of upside potential. I was, with traditional finance stuff, if I get a pop to 100, I scalp on things that are not part of a standard. So that's basically everything but MicroStrategy, which is our next position. We're going to talk about MicroStrategy. We're at 8 shares. Our goal was to get to 10. We got priced out of that, unfortunately. So we started having to buy with our dividend payout, because pulling $500 off my check when I'm not making 6 figures, we start talking about eating less. I'm supposed to be eating more this year. Like, it's just not happening. So we shifted to a little slower rolling strategy. And yeah, we're going to get there. This month, we will have those last 2 shares to hit 10, but we will also just be regularly buying MicroStrategy shares. I buy high, I buy low. Unfortunately, I did not get to touch on the sub 100 or the sub $300 shares, but that's just the way that it rolls. You get some dip. You don't get all the dip, unfortunately, when you're having to buy on payday / fixed days of the month. My currently, the week 4 is my week. That's my strong week. Actually, not unfortunately, Misty's part of my Bitcoin strategy, and I have high conviction in the MicroStrategy ecosystem, so I want to touch everything in it. That said, we're going to be buying MicroStrategy. I'm very, very long on MicroStrategy. I'm very, very bullish MicroStrategy, very bullish Bitcoin. Those things are things that are high conviction for me. Like I've said multiple times on the Reddit posts, MicroStrategy is Bitcoin that I'm willing to sell if I need to. So this play is a buffer to build a wall in front of my crypto because I don't want to sell my crypto off. So this is a little bit easier for me to let go. It's actually not a little bit, it's a lot of it, because it's just already in the traditional financial ecosystem. It'll be easier for me to leverage if I want to, but the level of volatility probably won't be doing that. But we're going to be building this portfolio up. So we're starting off 2025. We're at $5,313.93. We should hopefully be seeing double this by the end of the year. Also, last position, Palantir narrative. Palantir, I'm looking at AI platform infrastructure scalability. Palantir is a beast. And yeah, that's basically it. Like when we bought into Palantir, we're doing pretty good on that position as well. We're going to be buying this position also throughout the year. We'll be adding in Marathon Digital. That's going in the portfolio soon. We're going to start buying that. And there's a good potential that we could see some Coinbase shares as well, because we're going all in on the crypto companies. Like that's going to be the narrative. That's what I want my portfolio. I think I'll be good on heavily investing into what I believe in for the next decade. And I'm willing to put my money where my mouth is, and we're going to see how it plays out. Last but not least, got a little bit of consistent income rolling in to the portfolio that we're building up. We've got some YMAX shares, got those set to drip. We're not doing anything with the income yet, but once we get to where we're at about $100 a week, then we're going to start utilizing that position to actually self-fund this portfolio. So there's going to be a little bit of, I try to keep income everywhere. I want to get all the income. I want all the income coming in. I want these portfolios to be self-sufficient so that if I'm on hard times, there's a bare minimum that's going to be going into here. So that'll be nice. The goal is to get this YMAX position to $100 a week around therein, and then being able to, unleash the hounds and have those positions feed into this. Now, this is going to take a while before this part of the portfolio is doing what it needs to do, but I'm fine with that. Totally fine with it. We will keep plugging along, keep throwing money in here, because this is getting regularly fed from our income portfolio, and it'll grow the way that it does. This is something that I'm not looking at for tomorrow, the day after tomorrow, next year, 2 years from now. This is a very long-term play, very high conviction. The only thing that could potentially be moving are the positions that I'm not on house money. So DeFi, FT, this will go down. I have a few more shares that I have the ability to sell when I'm ready, because this position holding that I'm looking at for this is 250 shares. Because currently I'm on house money. I'm already on house money with this play. This play here, we're waiting. We're going to see what it does. Now, if we get to 100%, this will get cut down to 250, and I'll roll that into another play or into somewhere else, and then this will be on house money, so I don't have to worry about losing anything. Like, I can't lose on these positions. Actually, when I trim this down to 250, when I trim the DeFi Technologies position from 331 down to 250, that's going to be profit. That's going to be 100% profit. Like, I have already broken even. The next sell on this is just profit. I actually might buy some more Soul Strategies so that I'll be in the same boat, because I kind of like where I was sitting with DeFi Technologies when I was ready to sell down. So we might add another 500 shares on this. I don't know. We'll see. If we get some more dips, then we'll be highly considering buying those dips, just to run those numbers up, so that way if it makes some moves, we've got a little bit more to sell off, so I can sell and be in profit. And yeah, so let's bring me back up to the screen. Hide you. That's where we're at. We had a wonderful year. I'm excited for the raise that I will be giving myself this year. Again, We're hunting. We're out here hunting. And eventually I'll give myself a raise to the point to where it's like, I'm just not going to, maybe I don't want to go in here and do this every day. Maybe I don't want to get up and be on somebody else's schedule. Maybe I don't want to have to ask permission to go not be there. Maybe we'll have those things, but we're looking at those decisions. We're hoping to reach a state of financial independence this year, which means that I have matched my income and everything that I'm currently doing. I am able to do just out of this portfolio if I needed to. And then we're going to keep running those numbers up. We're looking at 31 more months to being 100% self-sufficient from our portfolio. That's the space that we're looking to get in. And then I can choose to just manage said portfolio, and that could be my technical job, whatever. Takes a lot less time, a lot less physicality than what I'm doing right now. Or I can go find something else that I want to do that's on my terms. But either way, at the 31 month mark, everything's on my terms. Like, that's going to be, I'm choosing to do this for sure at that point. So we're going to close it out there. We're hoping that you guys are motivated. You guys have made the adjustments, because the beginning of the year, I know a lot of people start off with those New Year's resolutions and they want to, they're really, really high level motivation. I mean, I went to the gym the other day. I'm getting ready to go to the gym after I'm done recording this. And, you know, you see all the people in there. It's just packed. You can't get to the machines that you usually use, because I was in shape before the beginning of the year. I'm in shape after the beginning of the year. I'll just be in better shape. But there's a lot of energy at the beginning of the year for a lot of things. And I'm hoping that some of that energy is directed at getting yourself into a financial position to where you are dictating your future financially, and you're not reliant on somebody giving you a good raise, and you're not having to switch jobs every 3 years to run the bag up to go work for somebody else because you just have to, because you have no other means of producing income. You have no other means of hunting. Having yourself financially stable and having a good financial foundation under you gives you the ability to dictate the terms. And I want that for everybody. I'm definitely going to have it for myself. So we'll see you guys next month for the next portfolio update, where we see how we did the month of January. And yeah, stay tuned, because tomorrow you're going to have our crypto portfolio update, so we can talk about rolling into 2025, what we're looking at, where we're headed, and what we're doing with the continuation of this bull run portfolio. See you tomorrow, folks. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.